This is the Retirement Solution Podcast with financial advisor John Hicks, founder of J. Hagan Capital.
There are so many things that we just have in our mind and we assume that they're correct because we've heard them 100,000 times. We got to get rid of all those myths. If you've done a great job saving, you'd be surprised what you can accomplish when you use the right strategies. Most people just aren't aware of them.
You've worked hard your whole life to earn and save. Now you need a plan to make that money work hard for you.
So people that have sacrificed opportunities to spend money, they sacrificed by putting the money in that 401k. They've sacrificed by putting that money in a 529 college plan for their grandkids. Those types of sacrifices should go rewarded in the long run.
John is here to help you find solutions for your retirement.
All right, so you know the expression comfort food.
Oh, yeah.
Do you have comfort TV? Something that you just, it just makes you feel good. Whenever you see it on TV, you stop and watch it. It just makes you feel good.
Yeah, I tell you what, it's really weird, but like my family, when we have a night down, sometimes we'll go to like Texas Roadhouse.
Yeah.
And they have this video up there called Thrive TV or Chive TV.
Yeah,
you ever seen these things?
It's a network,
Yeah. And it just rolls these funny clips.
Yep.
Every time I'm in there, my family's like, Dad, you never pay attention to us when we're here or you're watching that silly show. That to me is like comfort. Like
Soothing.
I just laugh
Take
the
a brain
whole
break.
time. Yeah, it's awesome. So, I mean, that would be my thing right now.
Okay.
I never have time to watch any like shows.
Right. No,
if you will.
that's the thing for me. So I always turn on Friends because for me, I can listen to it, but it also doesn't distract me from my task at hand because I've seen it 100 times. So there are, those favorite shows that we see on repeat, on rerun. I didn't know. Did you know that Friends is still making Warner Brothers $1 billion a year?
I had no idea of that.
$1 billion.
Oh my gosh.
Now, here's the real math. On top of that, 2% of the annual earnings go to each of the stars. Each of the 6 stars earn $20 million apiece every single year. Just shows up in their mailbox.
Gosh. That is unbelievable. I had no idea that that's how much money those guys made from that. That was a very lucrative compensation package then.
Sweet cash. Sweet cash retirement. I think they all retired by the time they were 40. I mean, they're still working, but who knows?
I was trying to think. I was like, man, when is the last time I saw Matthew Perry do anything? But I guess he doesn't have to do anything if he's got $20 million a year coming in.
They all do little
from work
side
he did,
projects.
what, 15, 20 years ago?
Hello.
What was the last year that Friends ran?
I think it was 2004. I think
2004 was the last year.
I think, or 3.
So for the last 18 years, those guys have just been making
$20 million a year just for waking up. Now, all right, for the rest of us who are not Jennifer Aniston and Matthew Perry, and we got to make ends meet, thinking about our cash. I mean, when it comes to folks that are getting closer to retirement, there is this whole stash the cash mentality. Does it not happen? Do you not see it?
It happens all the time.
Okay.
And I get it, right? So when someone says, okay, I finally got the kids out of college, finally getting close to getting the house paid off, they just start, basically stacking money in accounts, bank accounts, or maybe they're adding a ton more to their 401k. But I see it all the time. And in their mindset, this is that money that they might live off of for a year or two, in the beginning part of retirement. I don't think that's a bad idea. Heather, the only real issue is that most of the folks of the last years have not hardly gotten squat.
That's right.
Out of those cash savings accounts.
And if you factor in inflation, it's basically going backwards.
They've lost a ton of money. Yeah, basically CDs have always really been considered certificates of depreciation. Because if the bank is willing to give you 1.5%, they're probably earning 4 or 5 or 6 off of that, and inflation is probably close to that as well.
Right.
So that's basically been the adage. But the good news is that rates have come up a little bit to kind of help us out a little bit.
Okay, so the idea, though, of stashing, especially emergency fund cash, into a bank for easy access is why a lot of us do it. Greg McBride with Bankrate was telling the Wall Street Journal that traditional big banks it's what you were just saying, they're only paying less than 0.25% interest rate.
Absolutely.
However, we probably need to be looking at something else. High yield savings accounts at online banks are paying up to 3.5%. Here's what he said.
A lot of the bigger banks in particular, they're sitting on a mountain of deposits. They have more deposits than they know what to do with. So the last thing they're going to do is raise the cost of that. Banks that are eager for deposits, that have a growing loan operation and need to feed that machine by bringing in more deposits, they will pay increasingly competitive rates. If you're not taking any risk, would you rather earn 3.5% or would you rather earn 0.01%? I mean, that's a slam dunk.
I was going to say, you had me there. If you're not taking any risk, obviously you want the 3.5%.
That's exactly it.
How do we go about finding these better rates? What can we do to, quote unquote, beat the bank?
Yeah, so this is one of those things that we have been working on in our office for a long time, trying to get access. So when people have those cash reserved accounts, how can we just beat the bank? What are the opportunities we can do it? And what we have historically found, Heather, is that most of these people that we deal with, they don't like the idea of an online bank. They get very uncomfortable about that. They're like, man, how do I know that this isn't some hacker that has this really attractive website and then I'm giving him my money and they just take it all, right? They're just very uncomfortable. And I totally get that. So we literally this past week just have launched for all of our clients. We have just launched an actual network of high yield savings accounts that pay better than 4.15% on liquid cash daily. The crazy thing is that all of our clients are able just to link their checking account to these and they're able to get full FDIC. And the crazy thing about that is that in our office, we're vetting all these banks. We're ensuring that they're going to do the right thing for our clients. So when you look at that, if you're got your money at blank bank down the road and you're getting a whopping, let's assume that they've raised their rates for you on the liquid money and you're getting a whopping 1.5%. Well, Heather, we have some things that we have access to if we want to look at it for just a 1-year term that are paying better than 5%. Cash on cash. You can spend that money. Really? You can do whatever you want with. Yeah. So if we wanted to just go full liquid money market type accounts, we're over 4% right now linked through our firm, which is awesome. This is all FDIC insured. And if you have more than, because this happens all the time, if you have more than 250,000, we get 7 or 8 banks to come in so we can actually FDIC our clients' accounts for up to $2 million a piece. So for a lot of folks that keep a lot of money in cash savings, this gives them the opportunity to earn 4% on their money all the way up to $2 million. Okay. Which is crazy.
Can I ask the obvious question?
Yeah.
How? How does this all of a sudden become available? How is this working?
Yes. Well, finally, I guess the bad side of the Federal Reserve raising rates is that, of course, it's crushing the economy and messing up the stock market. The positive side of the Fed raising rates is now we finally have access to these funds. The big thing to understand, though, how come our local banks aren't doing it?
Yeah.
Well, they're not greedy. They just haven't made a lot of money because interest rates have been so low over the past 5, 6, 7 years. So they're just finally trying to balance their own budgets. They're finally trying to get things in gear. So they're not going to operate that. Plus, they have all the bricks and mortar, right?
Yeah.
You know, they have all of those bank branches, all of those ATMs, all these things. But for our clients, we're able to do everything electronically for them through all fully FDIC insured banks, but it really attaches to their own checking account. They literally push the button and it goes every single month or whenever they want from their checking account right into that high yield savings. And it all happens in a matter of nanoseconds. They push the button, it goes right back to their checking account. So what we have found is that you can establish, let's say, a limit on how much money you want to be in your checking account. Let's say $25,000. But if you have $300,000 in that account, the difference is going to roll into that high yield savings automatically, called an automatic sweep, and you will earn the yield on that extra money until you need to spend it. And then it goes right back to your checking account. You write the check on it. So we have done so many awesome things when it comes to evolution of banking and evolution of finances that this is incredible. So if you look at it, if you had $100,000 earning 1.5% historically, that's $1,500 a year. If we can get closer to 4.25%, that's $4,200 a year. That's almost triple the amount of money that you have in earnings off of the same liquid cash. And then the question I always have is, hey, do you really need that much liquidity? I mean, if you've had $100,000 in that savings account, not just for the last year, but for the last 4 or 5 or 6 years, why wouldn't you go ahead and just get a 1-year term thing to get at least 5.25%, maybe even 5.5% for some of that money? Then you're increasing your yield even further. Because guys, one of the things that I have just been absolutely focused on for the last several years is getting rid of that dead money from our accounts. Yeah. We have to get rid of dead money or we will not make it in retirement because inflation keeps moving up. The cost of goods keeps moving up. The cost of healthcare keeps moving up. The cost of transportation keeps moving up, but our money doesn't grow if we have it all in dead asset places. So if you have a whole bunch of cash that you keep around around, please use our firm as a resource. Find the ways that you can get a better rate of return with absolutely no more risk so that you can feel confident going into retirement. Whether it be the money markets that we finally have access to paying better than 4%, whether it's 1-year commitments that are going to pay better than 5%, or there are other things that we can use called insured indexing where we can insure that money against any losses, but instead of just getting a nominal interest rate, we can actually make money if a stock index goes up. None of these are perfect for everyone, but the idea is if you have not had access, if you don't know what they're like or how they operate, you owe it to yourself to find out what's available and how you can be the most efficient with your life savings.
Thanks for listening to the Retirement Solution Podcast with John Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Jonathan Hicks, insurance license number 548962.